In the past few months, the Fed has lowered the Fed funds rate, but mortgage rates went up. So does the federal funds rate not affect mortgage rates? Well, the simple answer is no. And why is that? Aren't mortgage rates supposed to come down when the Fed lowers the Fed funds rate? What makes rates go up or down? Is it the Fed? The President of the United States? Inflation? Well, the truth is that there are several factors that move mortgage rates, such as demand, competition for money, inflation, the economy, and even you, the consumer. So the 30-year fixed mortgage rate most closely follows the 10-year Treasury bond. The 10-year Treasury is more of an accurate indicator of which way rates will move. Specifically, mortgage rates move in the direction of the yields of the 10-year Treasury. The bond prices and the yields move in opposite directions. So the thing to remember is that as bond prices rise, its yields fall, and so do interest rates, usually. Now, investor demand of certain investment plays a big role in moving market yields. When demand for a given bond is strong, prices rise, and the return to the investor, or in other words, the yield, declines, and so do interest rates. The opposite is also true. When the demand for a given bond is weak, then the price of the bond falls and the return or yield rises. And so does the 30-year mortgage rate because it moves in the direction of the yield. When the economy is stressed, investors jump into investing in treasuries because it's considered a safe haven. So as a result, the yields can drop. A real-life example is what's happening right now with the U.S. imposing worldwide tariffs. This has freaked out the stock market, and many investors have sought a safe haven, which is the bond market. So the Fed funds rate does not have a direct effect on fixed rate mortgages, but can have indirect effects. And contrary to popular belief, the Fed does not control mortgage rates. Instead, there are several factors like inflation, the economy, supply and demand, and much more. Of course, I have oversimplified for the purposes of this video, but the bottom line is that mortgage rates do not follow the Fed funds rate. So now I hope that you've enjoyed this video. Please leave some comments on what your thoughts are, and I would love to hear what you think. And I'll see you folks on the next video.